They are challenging markets, but if I look at what's happened within the business, our volumes are stabilizing, which is really important. We've had significant share gains year to date, 290 basis points versus our key competitors, and 850 basis points since we introduced our Simplify, Execute, and Grow strategy. We're really focused on making sure that we continue to deliver G&A cost savings. We've over-delivered versus our targets, but at the same time, we're protecting sales and delivery capacity in a selective way to make sure that we can really capture the rebound when it comes. And our margins, although you mentioned they're down, are actually market leading. So we think this is a robust result in challenging markets. If I step back and look at what's happening, as you say, it's a very complex picture. There are different parts of the world where we're seeing buoyant labor markets and good growth. So, for example, Latin America, Asia Pacific, some of the Southern European countries are proving pretty robust. But then if I look at Northern Europe, there are real macroeconomic pressures in a number of different markets which are impacting the industry. And the US market is uncertain and has macroeconomic pressures. So it's a very different set of environments that we're operating in. Key thing that we do is we manage our capacity. We're focused on bringing our G&A costs down, but managing sales capacity really selectively in a really granular way so that we are positioned to capture the growth where we can get it and make the most of the rebound when it comes.
So, Coram, when you talk about some stabilization in the numbers, is this just the efforts you're talking about to micromanage it, or is it that you are seeing some stabilization in the broader labor market?
Well, I think to be fair, it's a bit of both. So, as I mentioned, we've taken share again this year, so 290 basis points year to date. I think that shows that we have a very effective way of managing our way through some slightly turbulent markets. But equally, across the board, we're seeing markets stabilize in terms of their volumes. There are a couple of very modest green shoots. So if I look at, for example, our professional recruitment business in the US, if I look at some of the tech staffing businesses in the US, they're very modestly up sequentially. I wouldn't call it a recovery, but it is a sign that things are stabilizing.
Coram, lovely to hear you talking to Karen this morning. And what about stabilising your share price as well? Simplify, Execute and Grow hasn't managed to do that so far. The year to date down 35%. What's the key to getting investors on board?
I think at the end of the day, we are a cyclical stock, and what's happening to our share price reflects the underlying uncertainty politically and economically. I think what we can focus on is what we are doing, which is really making sure that we are protecting the business, that we're managing capacity, that we're taking the costs out, protecting profitability and cash, and actually positioning ourselves for the rebound, because that is when we will benefit. And we are really well positioned to take advantage of that.